गुड इवनिंग, नमस्ते, वेलकम एवरीवन टू अनदर वेबिनार ऑफ एक्सिस म्यूचुअल फंड। मैं हूं आपका होस्ट और दोस्त आदित्य, फिर आपको एक अच्छी इंटरेस्टिंग टॉपिक लेके आते हुए। सो दर्शकों, आज का वेबिनार इज ऑन इक्विटी एंड डेट मार्केट आउटलुक आफ्टर इलेक्शंस। एंड मेरे साथ यहाँ पे हमारे जो स्पीकर है, ही इज हेड ऑफ पैसिव बिजनेस इन एक्सिस एएमसी। विकास सर, वेलकम।
Thank you, Aditya.
So Vikas sir has more than a decade of experience in investment and asset allocation. So I think हमें देरी नहीं करनी चाहिए, and let's move ahead to Vikas sir. Vikas sir, the floor is to you.
Yeah, thank you, Aditya, for inviting me today, and thank you, Karthik, for arranging this. We welcome all the participants who have joined in today's call. So, yes, there is a good news that Mr. Modi is back. Yes, but with a lot of probably uncertainty, and in last 3 4 days that we have seen, कि क्या होगा, कैसे होगा. Market also reacted, dramatically to whatever happened last 3 4 days. Because expectation exit polls were talking something different, and actual what happened was something different. But we can't forget, हम ये भूल नहीं सकते कि out of 543, BJP got 240 seats. Okay, so sometimes we try to reach to Everest, but we haven't understood that, or we have not accepted that we have reached the Everest base. So something like this has happened. It's a strong vote from peoples of India wanting Modi to back in the center. It's already there. Thankfully, I don't know if you heard him yesterday. It is the only party which got pre-election alliance, confirmed alliances, and it stayed post-election results also. In spite of BJP haven't got the 272 seats. तो इलेक्शन के बाद भी प्री पोल के जो अलायंसेस थे वो कंटिन्यू रहे. ऐसा अभी तक इलेक्शन में नहीं हुआ है पिछले 70-75 साल में. दैट्स व्हाट मिस्टर मोदी वाज सेइंग. दैट शोज दैट द अलायंसेस आल्सो हैव अ लॉट ऑफ कॉन्फिडेंस इन हिम, and all put together can have a strong government. This market reacted very sharply. लोगों को ऐसा लग रहा था कि शायद this government may not happen. The opposition may become very strong, and what all things will happen and what all not. But yesterday, when he addressed all NDA members who got elected in the whole parliamentary house, it was very clear that he's back. In fact, some of his couple of his lines, like he said very clearly, whatever you saw last 10 years was just a trailer. The action is going to happen now. And all his alliances, also both of his alliances, Mr. Naidu and Mr. Nitin Kumar, also said, we are there for all your resolutions, all your actions, all your agenda. We'll support that. So all the worry about this government won't be able to take reform decisions very aggressively has now shut down. So the government utne strongly काम करेगी. I think if you would have seen his body language and personality was as usual very strong. So yes, but market has reacted. So few slides that I'm going to run through. We're not going to talk about much about market data, but yes, there are things that we should cover about how market has reacted. So I would like to also read out, especially our CIO Ashish Gupta from Axis Asset Management, what he has said. I'll begin with that, and then I have few slides which I will talk about. So he said yesterday the NDA has secured a third term, and this indicates another 5 years of political stability. We expect the market will keenly watch the economic policy of the government, such as budget, government's 100-day plan, etc. The volatility faced in the last few days shows why investors should stay invested in the good days and take advantage of the decline, or advantage of decline to increase exposure to equities. I believe India has all the right ingredients in place to set the growth momentum further. Cyclical tailwinds continue to be strong for sectors such as industrials, infrastructure, including power, locally focused manufacturing, and utilities. Structural themes like financial and consumption should also be on the strong footing. With the political uncertainty behind us, the private sector may now start implementing their private sector may now start implementing their plans. The capex cycle is already turning around. Government-related infrastructure spending should get a boost. The real estate sector is also seeing a significant upturn. We expect the focus on to be back to companies and their earnings potential, which are backdrop of India's long-term growth story. Okay, so this is what he said. India, the government political stability will be strong for next 5 years. So don't worry about the strong reforms that government wanted to cover. But yes, we'll quickly cover about how we will begin with debt market. Uh, Incidentally, RBI also had its policy. Uh, Yeah. RBI also had monetary policy, and the RBI kept the repo rate unchanged at 6.5%. Again, a seventh consecutive times in the its April monetary policy meeting. Subsequently, SDF and MSF rates also remains unchanged at 6.25 and 6.75. Yes, there are 5 members voted in favor of pause, whereas only one member voted for the interest rate cut. The RBI retained GDP growth at 7% and inflation at 4.5%, but added that it will remain vigilant to the evolving outlook. Yes, geopolitical events and their impact on supply chain and commodity prices are key risks to the inflation. You can see the real GDP growth for Q1 and what we are expecting for the entire financial year, as well as CPI inflation to remain around 4.5% for this year. Flatter yield curve. If you look at from 3 months to 10 year, the rates are almost flat. We haven't seen any changes in the long end of the curve or in the short end of the curve. Generally, there is a huge gap which we see. But last 1 year, it's almost remained same, slightly as a bit from where so slightly at a lower when we were actually at 23, which is around 5 months ago. The banking liquidity is close to neutral. So macro outlook for both globally and locally has undergone a significant shift in the last quarter, which in turn RBI has comfort to move neutral liquidity stance. So they remain with the stance. Inflation continue to fall, which we see a clear trend of say last 4 years. Okay, the core inflation has been coming down, especially last 1 year continuously. Okay. And it is much beyond the RBI's tolerance band. Contribution to food inflation, we can see here the food remains the major contribution to the inflation, followed by vegetables, and there are some miscellaneous. So that continues inflation trend. The currency, yes, RBI, the Indian rupee still remains stable as emerging countries and declined visible dollar, which shows the strong balance sheet of the government of Indian government. But yes, we have seen the rise in commodity prices because of the geopolitical risk, the global crisis, which we may have seen. There are some issues happening on the global war and some bombing and all. So people are moving towards precious metals like gold and silver globally. Crude oil, which is the again, which is the single largest economic risk which India sees because of the huge import. But yes, thankfully, the crude has fallen from where it was in the March. That should give some relief to us. But yes, it still remains, and global crisis might, be a crisis might continue to give attention through crude for India. Okay. So yes, this is how our current opportunity that we are looking at. If you look at corporate bonds, rates are 3 months and 10 years are almost at same rate, whereas there is an opportunity from 1 year to 3 year band under corporate bond AAA, Whereas GSEC, short term and long term, not much difference. Okay, but yes, this is a good period where we are expecting going forward rates might come down, so you can stay long in the portfolio and book profit as and when you get an opportunity. Okay, yeah. So yeah, so this is the credit risk spread. Yeah, so risk to overall Indian debt market, external factors is interest rates as they are elevated, rising geopolitical and crude prices reason, so that will remain. Rupee depreciation, the fluctuation on account of interest rate actions in the other economies, it's actually not happening because of us. It's actually we are depending on or the actions of other countries. The trade growth and associate supply from the less government spending. Of course, we were expecting government wouldn't spend because of the election year. That actually kept the liquidity tight, especially last 8 to 10 months. But India growth story still remains, though political uncertainty may happen. We never know how things will span out there. But looking at the opposition, it looks slightly difficult for them to come into action. Of course, there can be a good debate we might see in the parliamentary, which we haven't seen in last 10 years. And Mr. Modi was very happy about it. Yes, now we have a strong opposition which you can debate and argue and do something which is good for India. Okay, so this is about debt market. Let's move towards equity market. Um, yeah. So this is how market remains 74 500 Sensex, which we have seen all-time high. Nifty touched its peak at 23,000, but yes, it's very close. This is where we have seen FII flows up to $1 billion, and domestic still remains very strong, more than $5 billion. So that tells us, we are no longer dependent on FII flows. The domestic flows itself are very, very strong to take care of any opportunity in the market. This is how the market performance. If you see, there are two indices strongly on the broader side have done really well. Nifty Next 50, which are the next 50 stocks after Nifty 50. Okay, because of the unique sectors and unique companies in that index, and as well as small cap also continue to do really well in 1 month and 1 year period. But this is the only year which we can see that one of the large cap markets, so large cap companies have done really well, which is the Nifty Next 50. In fact, has done very close to what a small caps have performed. On the sectoral side, the PSU story continued, which is the value story, value unlocking story. That's why we see PSU banks doing really well. Nifty, then energy stocks are doing well. Infra, there is a still demand. So these the three sectors remain very strong, especially last 1 year performance. Yeah, so domestic inflows remain strong, which we can see consistently, especially after March and April also have been very strong, though FIIs have pulled out money. Generally, this happens during the year end. And of course, because of the election also, a lot of people wanted to stay out of the market. But that's something which not currently affecting market much as we compare with domestic flows. Yeah. So regional level also, if you see relatively on the MSCI index, India P is relatively much lesser as compared to emerging market, which is a great news for so that we can expect a lot of foreign money also can come in in India. Corporate earnings have been good season halfway through of Q4, where net profits and EBITDA on Nifty 50 were 14% and 7% respectively. Though we have seen numbers better as last year's, and the expected numbers for the next 2 years also continue to be, EPS growth much higher on the back of all the reforms which government has done it so far, as well as what are we expecting them to do it in coming year. Election mode, yes, we have seen the market tends to do a sharp movements in election period. This is KCC 2019 what has happened. So we have seen also market reacted, but market rebound very well within 3 days. That tells us the investors are updated. They know how to react this time. There was no across the board selling which happened. Of course, only on the for election day we saw a lot of selling happen, but again last 2 days it recovered. So broad-based growth across. We can see there are companies which are actually consistently growing. There are now 525 companies which are actually more than 1 billion US dollar. That shows the large caps are no more large caps; they're actually become giant caps. Okay, so that's a great news. The market cap is also growing as we compare to the world market cap. Yeah. So let's look at how's India macro backdrop looks like. Yes, we are at a strong footing. We can see here GDP growth projection across China, UK, Japan, Europe, and US. India tends to be in the limelight. Last 3 years, 2 years, we have been consistent. The expected 2027 and average growth for last 5 years, 2022-27, are expected to much better than as compared to most of the countries. Yes, China and US remains, continue to have high expectation from the market in terms of growth, but India still remains number three. And so Modi was very keen to take India from number 5 to number 3. So these numbers would definitely, converge in our investment returns. Yeah. This is what we have seen, how each trillion company is. I'm talking about the right graph. Each trillion, the first trillion came in 2007, and the last trillion came in 2.5. It actually just took 2.5 years. So this you might see every year we might add 1 trillion. In the market capitalization, we can also see the companies are also doubling every year in all the category. Companies which are less than in the bracket of 1 to 5 billion, 5 to 10 billion, 10 to 50 billion, and 50 billion and above. Okay, so across categories, basically large cap, mid cap, and small cap, across the categories, companies are actually growing. They're actually doubling almost 4 years. So that shows there is a consistent growth happening across. It's not only tilted towards large cap, but mid cap and small caps are also growing consistently, and that's the 5-year trend. After Corona also has gone, we have seen a couple of global crisis, but still these companies are growing. It's a good news for all of us, all our investors. So GST collection remains strong. The GST collection also helping a lot of small companies to declare their numbers officially, positive numbers, and that's why we see a lot of small companies and below small cap company, which is micro cap companies, also showing some strong numbers, because now a lot of a lot of businesses, our numbers are coming on paper in white because of GST, which is helping the government as well as all the companies, because a lot of confidence of the investors have gone up in small and micro cap companies, and I think it's all thanks to GST collections. Okay. Yeah. So PMI numbers, new order numbers look steady. So all these numbers actually look much steady and very healthy. External factors remain consistent. Where there's a currency movement, it's still at the band what we are expecting. It does not cross that band. Service to trade balance also continue to improve. Forest reserve continue to improve. Import cost is also very strong, including the gold reserve. What government has also is much better, and it's been growing every year. Okay. Yeah. So this is again important how corporate leverage and bad loan ratios for the bank, which is going down, which is a good news. especially after the IBC has come into play. Where bankers actually, if you see, banks are growing. Not only the large banks, but mid and small banks are also growing. Especially the retail credit and rural credit is actually helping them in their books rather than the corporate lending. Yes, corporate leverage we can see actually is 15-year low. So they are putting in their own capital. So that pressure is not there on the bank. But yes, the rural credit is actually helping. And the deposit, because of Jandhan and all such activities, also a lot of money is seen in the banking industry, which is helping the credit facility, okay, for the banks. Domestic inflation, which we see, it's under control. We just saw on the previous debt market outlook also. Yeah. The challenges when we see, as I mentioned, the crude remains the only single economic risk for India, because we're the largest importer of crude. Okay, so any geopolitical risk, any global crisis in terms of war and invasion, it might affect us. Yes, Indian government, especially through under Modi's leadership, we have been able to make sure that we diversify to get our supply of crude, which we see what happened out during the Ukraine crisis also, and that actually helped us. We got a very good rate, but yes, it still remains because we are very dependent on this import. Okay. Yeah. So this is where our portfolio, and we are looking at how to find winners in the portfolio, which is durable business modes, competitive strength, long-term track record, growth potential companies, level of competition, entry barriers, management team also. We looked at very well, balance sheet also looked at, which is actually can be looked at how portfolio will exhibit a strong management pedigree, transparency in operation, investor, key stakeholder, create overseas committee, and strong internal control. Right, strong return metrics in terms of ROE and ROC, and stable cash flow is very very important. So quality and growth, the both factors which the house runs, continues to be remain. Okay. Teams currently, what as an AMC we are looking at is the consumption, domestic manufacturing. We just had last year manufacturing fund. I think probably Axis AMC set up that trend. We can see a lot of capex investment which is happening. And a lot more companies in this space will grow much stronger. Consumption, also, whether it is car, or whether it is the real estate, jewelry, or luxury goods, auto is been growing. So all your auto, real estate, consumer discretionary can be a big theme to play. Policy driven, we have seen the value unlocking happen. All the PSUs, whether it is PSU bank or PSU entities, have unlocked their value. It is back of the strong government reforms. We are expecting this will continue in coming future also. Export, yes, slowdown in global market will continue because of the crisis. But yes, we are currently underweighting on these sectors, which can actually bring in, which actually depend on the exports like IT, capital goods, and auto ancillaries. Okay. So this how should we look at to invested? India still continue to have a 7% GDP growth, moderating inflation, 10-year easing, 10-year GSEC yield. So we might see rates cut down from here. Yes, market has actually discounted 10-year almost 80 bips from its peak. So yes, you might see further going down, but yes, policy rates continue to remain at that rate. But market expectation, yeah, are that it will soften. So if you're looking at the debt side, yes, it's a great opportunity to go on long and wait for market the rate cut, where you'll be able to get good gain on the debt side. Nifty's 12-month P ratio is 20, which is actually in line with its long-term average. So though Nifty and Sensex are all-time high, but yes, P ratio is not very expensive. They said market near term, yes, we might see, we have seen volatility. Now in the next event market is expecting is the budget, the first budget. Their expectation in that it should be a popular budget, or it may not be a popular budget. So that's the market is trying to evaluate. So that can look at that can actually show some direction to the market. Government borrowing also will also affect this. Then interest rate cycle movement both globally as well as India will also play a role in market movement. Profit cycles, as we feel it's always halfway through. Profit share GDP rising below 2% to about 4% currently, likely to go to 8% in 4 to 5 years. That actually we are talking about 20% compounding earnings growth. Okay, so that kind of number you should look at. From by participating in these companies through the mutual fund route. Yes, start of new private capex cycle, very very important. Companies are actually haven't been doing capex for last few years. That should help when they start investing. Low debt balance sheet, which is very strong, which is actually good news. Healthy banking system, another good news. Corporate taxes are transparent and lower, and structural consumption is much better, right? So yes, global growth remains a concern. Rising crude oil remains a concern. Inflation, if it inches upward, may remain a concern, and relatively rich valuations which we have seen. But it's a broad level. It's much spread out. Yes, some of the sectors are actually looked at are very skewed in terms of valuations. But yes, overall, it's much better. Yeah, so the cyclical defensive, large cap, small and mid is something in place of a small and mid, we prefer large cap. Cyclical is something what we are looking at and as compared to defensive. And consumer discretionary industrial is something that we are confident of. And IT and capital goods we remain underweight. Okay. So that's all on the market outlook. So that's all. Aditya, if we have some questions, I am too happy to take.
Thank you for all the insights, Vikas, sir. So we do have few questions. So the first question is, will the outcome of the election hamper global policies and terms for trade?
Yeah, so if you look at how Mr. Modi has presented himself and the way he has invited a lot of investors globally. In fact, we also heard FTSE saying that, no, the Fitch rating saying that, if Modi doesn't come, then there is a challenge in Indian market because reform wise and decision wise, it might take some time and which will not be healthy for India as a economy as a whole. So yes, it affects definitely. But now, yes, we have Mr. Modi as a leader back. So domestically, it's a good news. How things pan out will actually tell us in coming 6 to 8 months. After government gives their first 100-day plan, start budgeting, and the first budget will actually help us to tell us where they are heading towards. But yes, we're expecting first year looks very slow. Probably next year onwards, once they know that yes, this coalition going to continue, we might see some strong decisions coming from this government.
So as an investor, based on the outlook that you have given me to understand in terms of equity and debt markets, I wanted to understand what are some potential investment opportunities that investors should consider.
Yeah. As I mentioned, if you are a conservative investor looking at debt, okay, so it's a good opportunity for you because we're expecting the 10-year yields are good, upwards of 7%. And if you're looking at to make some money out of some market movement, I think this year the rate cut expectations are there. So definitely you will get a chance to make money there on the debt side. Okay. On the equity side, as we see, the broad valuation looks much better. Except some of the sectors like IT and capital goods, which are slightly overweight. But apart from that, large cap looks much better at this point of time to avoid any volatility, because the government is not it's a coalition government. That's one. Global crises are continue to remain. So what would recommend you to be in the large cap side, probably Nifty or 50, Nifty 100 kind of universe. Okay, and on the debt side, you can stay on the long term if you're looking at some immediate returns. Okay, on the back of rate cut, but on the debt side also, if you are conservative, then you can be around 3 year kind of average maturity, which is also giving you probably better rate than 10 year. So large
So,
cap and debt,
so
three
go ahead,
years.
go ahead. Yes. Okay. So, given the potential of for market volatility, what risk management strategies would you recommend for an investor?
Yeah. So as I was reading Ashish Gupta, who our CIO's comment that investors should be ready with for any market movement. So this year we might see a lot of headwinds because of geopolitical risk, global crisis, and we have a coalition government. If you're opportunistic, I'm not talking about you stay in cash, but you should spread over the next 1 year, at least 6 months to 1 year. Stay on the large cap side. Whenever you get an opportunity where there's a correction, we can get into mid and small. As I mentioned, GST is helping good numbers from mid and small and micro cap companies as well. But yes, there is a risk. But yes, you will get a lot of opportunities this year. There at the market when the market correction, invest slightly more. But if you don't have cash to have a surplus, then you can stay invested on large cap on the through STP route or spread over route.
Okay. So what is your outlook for government bond yields in the wake of election? In the wake of the election?
Yeah. So as I mentioned, this year, if government continues to run and with a strong majority, our coalition continues to remain strong. If decisions can be taken, strong decision can be taken by BJP, definitely you might see rate going down. Okay, as I mentioned, market has already discounted from the peak of 10-year. It is already down by almost 70 to 80 basis point. Though there is no policy rate change have happened, but still markets are expecting its rate would come down, and that correction we already seen. If government is able to continue this in a strong foothold, we see that rate would go down. Okay, that's our expectation. But yes, we need to wait and watch for the first budget and the first borrowing calendar. That will give us direction where it would move. But yes, it should soften from here, unless is there any uncertainty or some geopolitical risk.
So, with the potential for lower returns in traditional fixed income, could you suggest any alternative investment that might be more attractive in the current scenario?
Yeah. So I think this is again a good question because I talked about if you're a conservative and then if you're an equity investor. But yes, hybrid kind of a strategy should make a lot of sense for investors. If you can't take a decision, I think debt and equity should be together. Multi-asset also we can look at debt, equity and gold, multi-asset kind of solution because on the back of global crisis, the gold always helps. We know that. Okay, 10-year is always strong, already on very high. If correction happens, that will also help us. But yes, multi-asset portfolio or hybrid portfolio should help to pass through all the volatility which we might see in this year if you're a conservative and a moderate investor.
Do you think that the results in India would impact global equity markets, or is there any international factors that could overshadow the domestic election?
Not much. What is happening. After China, India is becoming the manufacturing hub. Okay, but still China holds a huge volume which China is managing. Okay, so unless and until there is some policy change happen on that side, we don't see India affecting global markets. People always can go to China. Okay, but that will affect us, if we are unable to take any policy decision. But yes, globally effect of Indian election, I don't see much.
So there are two questions in chat. One is, how much volatility can we expect in the short term after the election? Like, what are the key factors that will influence investor confidence in the long term?
Yeah. So last 10 years, we have seen one-way market cycle. Okay, a strong government taking a lot of decisions, independent decisions, probably very, we can say, very, very strong decisions, which may not, which probably oppositions were not liking it, because opposition was not there at all. Okay. But this year we might see, we have a good opposition in front of BJP government, so there might be some policy challenges they might come across. And it's not only about the BJP government, it's also global crisis what is happening. Okay, so these two happening simultaneously. US is also under pressure. So we might see some volatility throughout the year. So I would request investors to spread over their investments. Okay, just don't get into behind returns. This particular asset class has delivered so much of return, so I should get into this kind of asset class, or any asset class I'm talking about, debt, equity, or commodity for that matter. You should spread across. That's the best advice for you for coming 1 year. But yes, as we saw, we cannot ignore India. Okay, we see that if you are if we are to become a third largest economy, the lot of growth, or we just saw 20% kind of EPS growth we are expecting for next 5 years. I think that should help your overall portfolio. But yes, in between, see what happened on Monday, Tuesday, and where are we sitting on Friday? Everybody has gone through a lot of volatility. Everybody, what will happen? What will happen? Such scenario, many times you'll be able to see these scenarios this year. So don't get worried about it. If you have a long-term view, we are much well poised. We will definitely get returns. But for investors who can't absorb, this so much of information, so much of market movement, spread your investments. Okay, yeah, if I have 100 rupees, I would actually spend it over next 10 months, right? And in between, if I get opportunity, probably I can put in more. That's the best way to look at. So don't worry about volatility. I think volatility can give us opportunity to invest. That's how one should look at.
So on the debt market outlook, basically this question states that after the results, did it affected the appetite for corporate bonds? As in, is there any specific industries or credit rating that could be impacted?
So, see, there is a lot of demand which is happening on the lower credit yield corporate bonds, right? I think that's the good opportunity for if you're looking at a debt market investments and looking at to have a higher risk appetite, and looking at higher expectation of return on the debt side. So credit risk bonds can be a good opportunity, but we would recommend you to take this through a mutual fund route. Okay, don't get into these bonds directly because you don't know how the liquidity will affect. Mutual fund has a risk management in place where they'll be able to maneuver, whether they'll be able to evaluate whether the particular bond is actually making sense, a liquidity issue, all of those things can be taken through route. So that's the way to look at. Corporate bonds, as I just mentioned, and we have seen in the slide, the corporate borrowing is going down because the huge capex are not happening, right? So we need to wait and watch. It doesn't make sense to be on the large cap corporates as of now if you are on the debt side. Rather, I would put that money into a hybrid. Whether I'm getting corporate bond GSEC and also I'm getting a equity exposure, rather than only looking at corporate bonds.
So thank you, Vikas sir. It was an insightful session. Eventually, there were a lot of pointers that me and as well as our investors have made throughout. So guys, with this, we end this webinar. We'll be back again with another webinar. So stay tuned, keep sharing, and keep investing.